Trump's decision just crashed the stock market. Did Donald Trump just trigger another stock market meltdown? Here's what happened. In a move that has sent shockwaves through the financial world, Trump announced a series of sweeping tariffs on imports from multiple countries. This decision has left investors and analysts scrambling to understand the full impact. After Trump announced sweeping tariffs on imports from multiple countries, the market went into a tailspin. The tariffs were not just minor adjustments, they were significant enough to disrupt global trade flows and create uncertainty in the markets. He slapped a 34% tariff on China, 20% on the EU, and 46% on Vietnam, among others. These tariffs are expected to increase the cost of goods, affecting everything from electronics to automobiles, and potentially leading to higher prices for consumers. Boom. The Dow Jones plummeted over 1,200 points in pre-market trading. This kind of drop is not just a minor blip, it represents a significant loss of confidence among investors and could have long-term implications for the economy. The S&P 500 fell nearly 5% on Thursday, and another 6% on Friday. The Nasdaq, down 6%. These declines are not just numbers, they represent billions of dollars in lost value, and can affect everything from retirement accounts to corporate investments. In total, about $2.5 trillion was wiped off Wall Street and global markets. This kind of loss is unprecedented, and has left many wondering what the future holds for the global economy. So who's feeling the heat? The impact of this market crash is being felt across various sectors, but some are more affected than others. The tech sector took the biggest hit. Companies that were once considered safe bets are now facing significant losses. Apple and Nvidia alone lost a combined $470 billion in value. These companies are giants in the tech industry, and their losses are a clear indicator of the broader market turmoil. But wait, not everyone's losing. In times of market volatility, there are always some who manage to find opportunities. Investors are flocking to gold and U.S. Treasury notes as safer assets. These are considered safe havens in times of economic uncertainty, and their value often increases when the stock market is in turmoil. Now what's next? Economists are warning of potential stagflation and a looming recession within the next year. Stagflation is a particularly troubling scenario because it combines stagnant economic growth with high inflation, making it difficult to address through traditional economic policies. Gregory Dacko from EY predicts a 1% lower GDP in 2025 and a 1.4% drop in 2026. These predictions are based on current trends and the potential long-term impact of the tariffs and market instability. Layoffs surged 60% in March. And here's the kicker. The job market, which had been relatively strong, is now showing signs of weakness, and this could have a ripple effect throughout the economy. Trump claims this market crash is intentional. He's using it as a strategy to pressure the Federal Reserve. He's pressuring the Federal Reserve to lower interest rates. Lower interest rates could stimulate economic activity, but they also come with risks, such as increasing inflation. According to him, the markets are going to boom. But is he right? Should you panic? While some believe that the market will recover quickly, others are more cautious. History shows that markets often recover after politically driven crashes. However, the timing and extent of the recovery can vary widely. But this time, will it be different? What do you think? The current economic environment is unique, and there are many factors at play that could influence the outcome. Is this a buying opportunity, or a sign of more crashes ahead? Some investors see the current market conditions as a chance to buy stocks at a discount, while others are more cautious and prefer to wait for more stability. Let me know in the comments. Your thoughts and opinions are valuable, and I'm curious to hear what you think about the current market situation.